It's about that time of day again. My name is Joseph. It's Tuesday evening, May the 9th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and DAX tonight. Crude is bearish and trying to retest today's low, but this afternoon's API report just sent prices racing higher, and the sellers need to get around this support trend line before they can try selling this market tomorrow. S&P's bearish with a big overshoot of a bear channel tonight, telling us to look for traps up in the battle zone and a target back to retest the low on Wednesday. Gold is bearish, and this short covering rally to finish today's session is giving the sellers a perfect opportunity to sell high. So we're watching for a pullback failure back to sell down to the lows tomorrow. Euro's bearish as well, but we're two legs down on the euro tonight, right after this recent correction, telling us to avoid selling down at these lows and watch for opportunities up at resistance levels waiting overhead on Wednesday. FDAX is bearish after the buyers failed to retest their objective, but this market is too low to sell at this point, so we're waiting for a two-legged correction to sell at a better price tomorrow. Had some big moves in the market. What a great week it's been. Another big day of opportunities here setting up for tomorrow. We got inventories tomorrow. We got a bunch of big ranges. We got some prior day, prior high, prior low levels to work with. I got a bunch of great charts to go over tonight on tonight's newsletter. Before we jump into those charts, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social media, lower left-hand corner. Lots of different ways to follow me throughout the day. I post my charts, links, and updates throughout the day on my many social media channels on the blog. I upload a video tonight. Below that video, there's a spot there to download today's charts. If you want to grab all the charts from tonight's video, just follow that link below the video tonight and have all the charts on your computer for tomorrow. And please don't forget to grab your free pass. If you're not an advanced member here at School of Trade, what are you waiting for? You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. Grab that free pass in the upper right-hand corner. And please don't forget, we get a great frequently asked questions page here at School of Trade, especially for all the new folks out there. And I'm always here to help. Hit me up on the live support button on the right-hand side of the website. We got one of those on the homepage at schooloftrade.com as well. Feel free to reach out and ask for help every step of the way. Hope you guys are having a great week so far. It's been an amazing second week here so far. It's only the second day of the week, right? It's been a great month of May. And of course, as I always remind you, though, we're only as good as our day tomorrow. So let's get ready for tomorrow. Tomorrow's Wednesday the 10th. Now, of course, the first thing I always think about when we talk about a Wednesday is inventories, right? Tomorrow's inventory day on crude oil. That means all eyes and ears are going to be shifting towards that 10:30 a.m. petroleum status report tomorrow. Now, it's not just for crude oil these days, right? It also affects the E-minis as well. The S&P, right, has sympathy volatility, right, along with that petroleum status report tomorrow. So don't be surprised, right, if we get crude acting as the leader tomorrow, right, and then of course the S&P following in its shadow. So watch out for that tomorrow on the S&P as well. Early in, early out on Wednesday mornings when it comes to crude oil trading. Remember, 10:30 is the news tomorrow, right, on crude oil. So you want to be thinking 10:15 is the cutoff, and then give it at least 5 minutes after the news comes out. And remember, trading after inventories is always lower reliability, so please make sure to use caution. We'll be doing that tomorrow, of course, with all of our clients in the trade room opening up at 8 o'clock Eastern time. Look forward to seeing you guys there. Tonight we have the Consumer Price Index coming out of China. That'll be, of course, moving the markets around in the overnight Asian session and early into London. Not seeing much else besides that. We get the 9:30 news tonight. Not a lot here on the schedule for tomorrow. As I said in last night's newsletter, we really don't start getting a lot of the news until Thursday, Friday this week. So, of course, really the only major news tomorrow is that petroleum status report. So 10:15 cutoff for crude oil, at least 5 minutes afterwards, right? And don't forget to watch the S&P after that news comes out, because crude oil will lead the S&P, right? It's a real interesting phenomenon how that S&P is kind of following the shadow right now of oil around that news event. So watch that for tomorrow. And we'll talk about the rest of the week when we come back and do it again tomorrow afternoon, right? So come back and join us in tomorrow night's newsletter, and we'll talk about the plan, right, for Thursday and Friday. Hump day tomorrow, right? Inventory day, right? Beware of that inventory report tomorrow at 10:15. All right, we got some charts to cover here tonight. We'll go crude, S&P, gold, euro, FDAX. We'll cover them all. Now, first of all, I've got a bunch of levels for you guys tomorrow. I didn't put these on the chart tonight. I'll make sure to update that here for you. Hold on one second here. I was running a little bit late here this afternoon. All right, so there are the levels for tomorrow's session. These would be good for Wednesday's session. Now, don't forget, ahead of the inventory report on Wednesdays, I publish my crude oil inventory levels for Wednesday. You can write them down on the chart, right? You can write them down from the video here tonight, or just simply scroll down, right? Go below this video on the blog. It's not in the YouTube channel. Go below this video on the blog. Scroll down, and right where it says click here to read more, right? Open that link up and you'll see a spot there, right, to copy and paste all those inventory levels for tomorrow. I also posted those on my stock twits, my Twitter, my Facebook, right, whatever else, right, social media channels I got these days, right? So I put all those levels out on social media. You guys have those already if you're following me on social. And of course, again, you can scroll down below this video on the blog at Sideways Markets and get your hands on all the levels, or you can just write them right down, right? They're pretty easy there, and those levels will act as short-term support and resistance for tomorrow, right? So just tomorrow, right? Nothing on Thursday and Friday. These will be just active, right, for Wednesday. So get them while they're hot. And again, don't forget, we're going to do this all together with all of our clients tomorrow, 8 o'clock Eastern time in the trade room. Let's jump in. Crude is bearish ahead of tomorrow's inventory report. But as you can see, this afternoon's API report, combined with sellers taking profit at the measured move, has clearly given the bulls the opportunity to take control of this market right now. The most important clue in this chart is that measured move. They tested it once, and the odds are very high they're going to test it again in the medium term. The only obstacle for the bears at this point is to get below that support trend line before they think about selling back down to the lows tomorrow. Now, buyers on the other end, right, they need to get a hold back. They need to hold a pullback right now and show us some continued strength to the upside, because I can guarantee a lot of traders don't believe this rally very much at all. Now, whenever we're going into inventories, I always want to remind you that the time leading up to inventories on Wednesdays, this market loves to turn direction just to lead into an inventory report and then dump back down. So we may be bullish up until 10:30, 10:35 tomorrow. Right now, I can't give this thing to the hands of the bulls yet. But I'm telling you right now, though, on Tuesday night, leading into Wednesday's 10:30 inventory report, we oftentimes do see kind of a jackknife right on the chart, and we see things really turn direction, only to get, in this case, sold back down ahead of the inventory report tomorrow, right? So just keep an open mind to this, right? We're going to do our best to anticipate this ahead of the inventory report tomorrow. But again, be aware, our job is difficult to predict what's going to happen tomorrow as we go into 10 a.m., 10:15, and 10:30, because again, it's kind of a coin toss as far as what the reaction will be, right, to the actual news tomorrow. So with that said, as you can see, the market is clearly bearish here today, right? It was bearish pretty much the entire session here this morning. I think really there are three main things on this chart that I want you to pay close attention to. The very first thing I see is they got the measured move once. Now, typically speaking, again, we're going to news here tomorrow, right? But typically speaking, when we get the measured move tested once, we're going to come back and get it again, right? In fact, a lot of times we get it one more time and back down again. We usually get a number of different chances to sell down to the measured move, sell it high, go back down again, and then oftentimes again, right? So again, they tested the measured move once. They should get it up and bring it back down, right? Now let's keep rolling. The next thing, which is probably part of the fuel of this move going higher, is this little guy right here. And we're going to see this also on the euro, right? And we're going to see a good example of it fail on the FDAX. So make sure you stick around to the end of this video tonight. I know their videos are long, right? And I always appreciate your valuable time, but get a lot of great learning opportunities as we go deeper into tonight's video. The bottom line is focus your energy up top here. This was the first time the sellers really got a chance to sell high in the U.S. morning session. Now, the reason why this is important is because when the bears have a chance to get in selling high, we talked about this last week, we talk about this all the time in this newsletter, we have what we call the 2-try rule. So when the bears get their chance here to sell high, they're going to give it 2 attempts, 1 and 2, right? And you'll notice they're symmetrical, right? So very, very important how that 2 legs down runs right into that measured move. So the second thing I want you to think about here tonight is the bears had their chance to sell high. I get a great example in the euro as well. The bears got a chance to sell high and they're 2 legs down. Now, whenever we go 2 legs down, or we try twice and fail, which you'll see in the FDAX in a moment or two, right, we always expect to see a pretty sharp correction. And so that helps explain, right, why this market bounced so hard off of that measured move, because it wasn't just a measured move, right? It was actually the bears, again, getting pretty much their first chance to sell high in the U.S. session, which starts at 8 o'clock Eastern time, right? That was their first shot, and they took it 2 legs down from there. So really, really good example there of 2 legs down and then a big jackknife right back up. The third important piece of this puzzle is this strong move higher here. As you can see, this is all based on news, first of all. I want to make sure we clarify this, right? This move up is based on news. Well, I shouldn't say that. I would say the first leg of this is based on that 2 legs down to the measured move and the profit taking, right? Short covering rally. But then this stuff right here, this is all based on news. So I would imagine a lot of traders are a little bit skeptical, right, of this move higher. Now that move higher creates this rising support trend line, and it's the third kind of piece of the puzzle. So put this all together now. We have the measured move that is most likely going to find a way to retest as long as we don't see too much anticipation ahead of tomorrow's inventory report. At the same time, we're seeing what exactly should happen, a nice strong bounce after being 2 legs down, and now we have the inventory report, the API report, with this rising trend line. My goal here right now is to get below that trend line, right? Get below that trend line and then use it on the opposite side, okay, to sell high. Where's the objective? The objective is to get back down to that measured move again. That's the objective. So how we get there is really the big variable right now. Now, obviously, if the bulls can take control of this, right, if they can hold the pullback and then push higher, they can take control of this market, and their objective now will be up to retest the high. And we may come in tomorrow morning and we may already be back at that high, right? This happens quite a bit, again, ahead of the inventory report. So for the bulls, look for that price up, hold that pullback and go. Once those bulls hold that pullback, right, we're off to the races trying to retest that high. But if you're like a lot of other traders out there that probably are skeptical of this rally, we're looking for a price here to break down, right, pull back and use it. The key is a breakdown is going to be a horrible place to be a seller, because that's where the buyers will be hanging out, right? The buyers will want to buy low. What I want to do is I want to look for selling opportunities as this price kind of bounces right off that pullback with the appropriate trigger that will give me a chance here now to sell high with that target going back down to the low. Now, what if we don't get that bounce up, right? What if it just collapses here, right? If it collapses here, then what you want to think about is avoid chasing the move lower and look for what we call a 2-legged correction, right? It's a 2-legged move using a little trend line, right, up and back from there. That'll be a nice easy way to avoid, right, selling low here tomorrow. If you can't get it, if it rolls all the way down, oftentimes what happens is if it rolls all the way back to that measured move, usually you'll find some sort of trading range here, right, and we can sell the high with traps, right? Just sell the high with traps and failures right above the high, right, of that range. Keep selling it, right, and bringing it back down to that measured move. If this really turns into a bloodbath here tomorrow, right, we got that big round number at 45 waiting down bottom here, right, as a target as well. But right now here, obviously, the objective is to get back down, right, to retest that measured move through the trend line, call it a breakout pullback back down, or tumbles, 2-legged move, right, or tumbles into a trading range, right, trap and sell back down. Just don't sell into that low. Or let's not forget, right, the buyers can take control, new higher high, hold the pullback, right? If they have a successful pullback on that, then we can start looking at this in terms of, right, running this price higher. This will be a bull channel. Right, this will be a bull channel. If they can hold that pullback, right, then we can start buying low, right, start buying low at that point, right, and look for that return back up to retest the high. Again, watch those levels for tomorrow. I put these out again on social media, and I also put them out right on the blog here as well. So make sure you check that out right before you trade tomorrow. How about some S&P? Boy, the S&P took the words out of my mouth here. Now, guys and gals, once again, I want to thank you so much for tuning in tonight's newsletter. Don't forget, if you're on our YouTube channel, go into that video description of the YouTube video. Go into that description, grab the links inside that YouTube video description. Come join me on the blog at Sideways Markets, or head over to schooloftrade.com and grab your free trial. We get a great free trial here at School of Trade. You'll learn all about the details of how we trade, what we trade, why I trade, when I trade. Everything you'll learn there is part of our free trial. And please don't forget our beginner, intermediate, and advanced levels of membership. I got a place for everybody to call home, whether you're a brand new trader or you're a grizzled veteran still trying to put this piece together to get consistently profitable. I look forward to teaching you and welcoming you into our beginner, intermediate, and advanced levels membership. I'm always here, guys. I've covered a lot tonight on the newsletter. I look forward to digging in more. Right, this is only the tip of the iceberg. Hit me up on live support if you have any questions. I'll be with you guys tomorrow in real time tomorrow at 8 o'clock Eastern time. And of course, don't forget, right, if I don't see you guys tomorrow in the trade room, I'll see you same time, same place on tomorrow night's newsletter. Thanks for sticking around me here tonight. I appreciate you guys, as always, tuning into the newsletter. We'll see you guys next time. Adios, amigos.